need for intros. I know our participants are coming in, but that's fine.
Sure.
And then just up your audio a little bit for when presentation time comes.
That's noted.
Great. Owen, do you want to test video now quickly?
Just give me a moment.
No, that's fine. Thanks. We've got a nice group of participants already with us. So as soon as we check with you, Owen, or perhaps we can defer it, or you can continue while I start with the introductions so that we can honor those who've taken the trouble to join us on time. Let me extend a very warm welcome. Oh, great, Owen, you look fine. Excellent, no problem. And Tino, as I'm going through these remarks as well, if for whatever reason your video is now working, you can join us so that our participants can see you. Welcome to our over 30 participants to this fourth webinar in the series that the Securities and Exchange Commission brings to you for the growth in depth and breadth of the Zimbabwe capital market. In the last two, we've been looking at the unit trust in particular. This asset class has been historically of tremendous interest to Zimbabweans. And for those who are old enough to remember, you'll recall that there was the heyday of unit trusts in the 90s and the early 2000s. And we believe that for retail investors, this is an asset class that is an all-weather asset class managed by very capable regulated entities. And we believe this is one way of growing the savings and investment culture for our country. To take us through what is called the Grow Wealth Report, a survey which is compiled by Interlego of all fund managers in the country from both a compliance and investor education perspective, we've got two special guests to take you through this particular report. The one guest, Owen, will give us an overview of the report. It's been running now for over 2 years, so many of you will be familiar with it. And then Tina will come in and give us the nuts and bolts of the compilation and the analysis that is done by the coordinators. So just by way of reminder, my name is Farai Mpofu. I'm responsible for investor education at the Commission, which is, of course, the regulator of the capital market in Zimbabwe. I'm joined today by two guests. The first is Tino. I'll read her bio first because she's really getting stuck into the meat of the issue today. And her bio reads as follows. So Tino will be sharing a presentation. However, Tino Gakanje is an associate consultant at Interlego Investment Consultants. Over the past 5 years, she has honed her expertise in investment analysis and performance reporting. Tino's expertise spans investment analysis and research, performance reporting and attribution, financial modeling, and data analysis. A graduate in financial engineering, Tinotenda is committed to ongoing learning and professional development. She's currently pursuing the CIPM program, further solidifying her position as a leader in her field. Welcome, Tino, and we look forward to your presentation. We also are delighted to welcome back Owen Nyamusi, who's a senior consultant and head of corporate advisory services at Interlego Investment Consultants. He's an accomplished capital markets practitioner with over 15 years of experience in corporate finance, investment management, and risk advisory. He has advised on buy-side and sell-side transactions with an aggregated value exceeding USD 200 million over the last decade, including many innovative, bespoke investment vehicles. He holds a bachelor's degree in financial engineering as well, and is progressing towards an executive global MBA. Welcome, Owen. Nice to see you again, and thanks for coming back to us. So to get started, we have Owen who will provide us with an overview, a bit of background. He may take us back to previous webinars. He may also delve into the vast experience a decade plus in the sector, and essentially provide us with a broad appreciation of the purpose of this monthly survey, and of course what goes into it, and possibly even its the expected impact for the sector and the expected impact for the investor. I mean, the investor wants a return, yes, but there may be other elements that Owen may explore for us. After his overview, I will invite Tino to come in. She will share her screen and take us through, as I said, the nitty-gritties of the Grow Wealth survey. So for now, Owen, over to you. You're free to disable or continue enabling your camera. It's entirely up to you and what you're comfortable with. Thank you very much again to all our participants for joining us, and we hope we have an enjoyable hour or so together. Thank you.
Thanks, Farai, and good morning once again to our esteemed participants in this webinar. And it's always a pleasure to be in this forum once again to share information and insights that may lead us to improve in terms of how our capital markets develop going forward into the future. Just confirm if you can see my screen. I've just a very brief presentation before Tino comes through and takes over.
Perfect. We see you and we hear you. Thank you.
Sure. So the Grow Wealth survey is a unit trust survey that we have been compiling and publishing for a few years now. The whole thrust of this particular survey is to really disseminate information to the investing public in particular. As most of you know, unit trusts are collective investment schemes that are regulated under the Collective Investment Schemes Act. And as a collective investment scheme and a publicly available investment instrument, it is always vitally important that we are able to share information on what unit trusts are, how investors can participate and invest in the unit trusts, what the underlying fundamentals of the unit trust vehicles themselves are, and what investors can expect when they do participate in these particular investment vehicles. So the Grow Wealth Unit Trust Survey is a survey that we do publish on a monthly basis, where we assess the length and breadth of the unit trust landscape within Zimbabwe, where we look at each particular individual unit trust fund that has been set up by the various asset managers that we do have in the market. And we collect data from those managers. We do an assessment in terms of the performance of those particular unit trusts. And we also look at the trends that are emerging and the strategies that the various asset managers are employing for a particular unit trust. So the survey really benefits investors out there to have a bird's eye overview of what is on offer in terms of the unit trust landscape that we have in this particular market. On my slide there, you can see some of the key imperatives as to why we need to have this particular unit trust survey. The most basic reason, obviously, as I have just highlighted, is information flow. This report is an informative guideline for investors out there to be able to look at not only what is available, what the different strategies are in terms of the different unit trust funds, but also to see what the actual underlying fundamentals are and the long-term performance trend is of a lot of these unit trust funds that we have in this particular landscape. So amongst the other reasons that we have for having this Grow Wealth Unit Trust Survey is obviously investor education. I think it's vitally important that the investing public out there is well versed with the ins and outs of unit trust investments, and to also actually have an appreciation of who the asset managers are out there. From time to time, with every monthly publication, you will see we will profile a particular fund manager from within this market. So you will actually get to appreciate who the individuals and professionals are who are behind the scenes in terms of establishing these unit trust funds, running and executing the strategies, and also delivering the results that investors will be seeking. So investor education is vitally important as far as this particular Growth Unit Trust survey is concerned. The other reason is information efficiency. Um, Whenever investors participate in our capital markets, it is very important that information is readily available to them so that they can make informed decisions. So whenever we have information bottlenecks, if I can put it that way, it really impedes the efficiency of the capital markets in general and the actual prospects of having an efficient flow of investors for these unit trust funds within this market. So this Grow Wealth Unit Trust Survey does serve a vitally important, purpose of providing information that investors can readily refer to and make informed decisions on that particular basis. So it has really enhanced the information efficiency, because without this survey, you are probably now going to have to be doing what I would call, quote unquote, information from the individual asset managers. And given the number of unit trust funds that are out there, you can imagine that it may take you quite a bit of time to really gather that information, compile it, and actually be able to compare across the different unit trust funds. So this report actually allows you to be able to benchmark across the different unit trusts that are available and see all that information in a very compact and accessible format. The other reason, obviously, is performance benchmarking, which I've just mentioned. It's important for your investors to know how the different funds are performing, which fund is outperforming the chosen benchmarks that we have in this particular market, which funds are doing well under certain market environments, which funds perhaps are not doing so well, and what strategies are best suited to the requirements of a particular investor, depending on your investment objectives. So performance benchmarking is very important because it allows us then to be able to assess how well the individual unit trust funds are performing over a defined period of time. Then we can also do risk assessment. As you can imagine, the different unit trust funds do have different risk profiles that they come with. Some unit trust funds are a bit more aggressive, some are less so in terms of chasing higher returns. So you can actually then look at our Grow Wealth Unit Trust Survey report and be able to actually see which particular unit trust fund strategies are perhaps higher risk, which ones are perhaps median risk, and which ones are lower risk, and then make your decision to invest accordingly once you have understood that particular risk profile. Then I think the other reason, obviously, is regulatory compliance. I think the Grow Wealth survey, it has the impact of ensuring that the asset managers and their unit trust investment vehicles remain compliant. I think whenever information is put out in the public domain for investors to receive and to scrutinize, it essentially keeps the asset managers on their toes, so to speak. And as I said earlier, the unit trusts themselves are regulated investment vehicles under the Collective Investment Schemes Act. So this report actually does help us to see which unit trust funds remain compliant. Whenever there are compliance issues, the information will also be made public accordingly from the regulator, and it will eventually filter into our monthly survey report as well. Then finally, this report is really important for transparency and accountability. Because we do an independent assessment of the performance of the various unit trust funds that are available in our market, this really allows us to then have an independent eye that can confirm the performances of the various asset managers. You may go to the individual asset managers and ask for historical performance figures for their different unit trust funds, and they will perhaps make that information available. But ourselves as an independent party who can actually then objectively look at the numbers that they would have put out, we can then give that independent assessment and confirm that indeed the claimed performance for a particular unit trust fund is indeed the correct one. So it then allows that element of transparency to be available to the investing public as they assess the different unit trust funds that are available in our market, and by extension, accountability in that regard. So there is nowhere to hide, so to speak, for the different asset managers and their funds. If a fund does indeed register a negative performance, for example, over a defined period of time, that will be in evidence in our report, and the manager would have to then, be accountable for how their fund has actually performed, and also be able to articulate as to the reasons why the fund has underperformed or even outperformed, as the case may be. So really, these are, the high level main reasons why the Grow Wealth survey report does exist. It is our desire as the generators of this particular report to improve on it as time goes on, so that it becomes even more informative and provides greater value to the investing public as they consume the information in this report. So I think in a nutshell, Farai, I think that is really just my high level overview of the Grow Wealth report, why it exists, and the reasons, for its a publication on a regular basis. I will stop for now and maybe entertain a question or two as we proceed with our webinar.
Thank you so much, Owen. I appreciate very much the presentation you've given. Very concise, high level, touching all of the key areas that we needed to look at. And the good thing is that this presentation has appeal for practitioners, but also appeals to those who wish to begin to participate in the capital market. What I find interesting, Owen, and relevant is that notwithstanding these efforts to have discussions, to put investor education at the fore, engage the public on issues of investment in our sector, I still am confronted with this, the elephant in the room. The level of awareness remains extremely low. And of course, the level of participation also remains low. And as we're waiting for any questions that might be coming, I'm reminded of a recent taxi ride that I did earlier this week. And it ended up being a taxi ride which was talking about investment, where a very dynamic woman taxi driver actually was asking me about what participation for her should look like, what she should consider. We spoke about issues of risk. We spoke about, who maybe where she should place her funds. So I did direct her to Grow Wealth, the survey, for information. I did direct her there also to understand in whose hands she would be placing her funds, to see a face and to understand the investment philosophy and so on. So I do appreciate the panoramic view you've given us of the report, and look forward to delving deeper into what it offers. Swinging to our participants for now, I would like to know if there are any questions that are directly targeted at Owen at this stage. Would you like to hold on to them until Tino has taken us through her presentation? Or does anybody wish to unmute or put their hand up so that their questions or comments can be taken at this time? Okay, I see no indication yet of questions or comments. So let me thank you again, Owen, and invite Tino, a dynamic trailblazer, to please come through to share her screen and give us the benefit of her technical insights on the Grow Wealth survey and what it takes to put that report together. Tino, are you available to begin to do that? I'm sure you have the rights. We did see your presentation in the test environment earlier, but you know what gremlins do. Just when you're about to go live, these things begin to play up. So great. Tino, we see your presentation. Let me just hear your audio to confirm that you can proceed.
Thank you, Farai. Confirm if you can hear me.
Fantastic. Thank you so much. All the best, Tino.
Thank you so much, Farai. Good morning, ladies and gentlemen. So I'm just going to take you through the nitty-gritties of the unit trust survey report or the growth report. So this report basically just covers various types of unit trust funds, which are differentiated based on their investment objectives, asset allocation, and also risk profiles. So I think currently we have over 25 active unit trust funds, which are being offered by 9 different investment management firms. And each fund has a prospectus that outlines the fund's objectives, its strategies, and also targeted investors, as well as a trust deed, that is contractual agreement between the investors represented by the trustee and also the fund manager. So basically this report starts by doing a background research about funds to understand their different setup, investment objectives, strategies, and investors with the fund targets. So the information obtained may be augmented by interviews with the relevant fund managers just to get an in-depth understanding of the fund over and above what may be contained in the documentation. So this process of data gathering involves gathering all the historic information about the fund, particularly the database or past daily prices per fund. So the first step in the data gathering process and analysis when we do the growth report is we conduct background research on all the unit trust funds in the market, so as to understand their different objectives, strategies, and also target markets. The next step is to obtain historical data, so as to establish a way of obtaining the prices and also any other relevant information that can help the public. Then the next step that takes place when we do the data gathering process, when we do the growth report, is doing performance calculations from the data that have been received from the fund managers. We then perform the relevant performance calculations and any other relevant ratios that can be useful to the investing public. So the last step is then publish the reports in various media for access by members of the public. And this report is done monthly and it's then published in the Herald every month. And you can also access this report on our website, which is www.interlego-ic.com. Okay, so moving on to the report structure. The report just provides the following information at a minimum. The first thing is the fund groupings, where we just group the different funds provided by the different asset managers according to their objectives and strategies, so as to make it easier for the for the investing public to make their comparisons, and it can help them to choose their preferred fund managers after looking at their different strategies and objectives. The other thing that's shown in the report is the minimum investment amount in period. So for each fund, we also show the minimum amount that's accepted from an investor, and also the minimum investment period that's required before any redemptions are done by the investor. We also show the bid and offer prices, which are calculated on a daily basis. And the publication just shows the latest bid and offer prices as at the last day of the month. Then we also do performance calculations after gathering all the data. So that performance then will be shown in the report for the selected periods, such as monthly performances, quarterly performance, year to date, and also since inception. And also in the report, you can find what's known as the market report, which is just a brief summary of the performance of the different capital markets where the unit trust funds are invested, just to give an indication of the performance drivers of the different funds. We also showcase the monthly fund manager profile. So on a rotational basis, we showcase the different fund managers with unit trusts that are in the growth report. And this helps the investors to get an in-depth insight into the objectives and the strategies of each fund, and also the capabilities of the fund manager. So the report structure in terms of classification, we have the stable equity funds, which just seek to achieve stable long-term growth. And these are largely invested in your blue chip counters, and the benchmark for that is the ZSE Top 10 Index. We also have aggressive equity funds, which target short-term growth by taking advantage of speculative or any other short-term return opportunities that are traded more actively. And the ZSE All-Share Index is the benchmark for those funds. We also have balanced funds, which invest in both listed equities and fixed income securities. And the benchmarks is the 50% All-Share Index plus the 50% bond index. There's also bond funds in that report, which invest in long-term fixed income securities, and the benchmark for those is the bond index. We also have the money market funds, which invest in short-term money market securities, and the money market index is the benchmark for those funds. We also have the property funds, which invest primarily in real estate properties or any property related assets. I think in the past year, we have also started seeing the gold funds coming in, and it's just a collective investment scheme that pulls money from multiple investors to invest in gold-related assets. For example, gold mining companies, gold-related derivatives. So these are some of the funds that are shown in our monthly growth report. And that's the end of my brief explanation of the growth report, how we come about it, and what's shown in that report. I'll give back the platform to Owen. Thank you.
Thank you very much, Tino. And I know you've handed over very deliberately and intentionally to Owen. Owen, are you available to come in and share some reflections following Tino's presentation?
Yes, thanks, Farai, and thanks, Tino, for the presentation. So as Tino highlighted, we do have a very systematic process that we go through in terms of generating the Grow World report. And I think what we are actually building, given that we've been generating these reports over the years, we are really compiling a database that will stand us in good stead for years to come in terms of really looking at the performance trends of our unit trust industry, and also to really have a good sense of how the unit trust landscape has been evolving. I know for your ordinary investors, sometimes it can sound a little bit too technical when you actually look at the report for the very first time and you are trying to get the hang of what it actually means in terms of what a bid is, what an offer is, and what your return numbers actually mean. When you actually put your dollars and cents into a particular investment. But I think that's also part of the investor education process that we want to cultivate within this market. So over time, I think we will really have a good data repository that will allow us to really assess how the unit trust investments themselves have evolved. I think if you compare us with the more advanced markets just next door in South Africa, for instance, you will find that they have, eh, more than 5 times the number of unit trust funds that they actually have in that market compared to what we have here. And they also even have a wider range of strategies that the different unit trust funds do subscribe to. So as we get to a more deeper unit trust market with more unit trust that may be introduced in the years to come, all this data that we are gathering via the Grow Wealth Unit Trust Survey will really be very important as we dive deeper into it and maybe even look at some trends that can only be assessed over a long enough time period. I think those of our participants in this webinar who are old enough to remember, you will remember that in the 90s, we had a reasonably vibrant unit trust market, albeit the unit trusts were not as many, but it was quite vibrant and investors could participate. But because back then and getting into the 2000s, we did not have, a comprehensive overview survey like the Grow Wealth report that would then cover those unit trusts. It's actually quite difficult sometimes to get the data, the performance data of those unit trust funds as they performed during that particular period in the mid to late 90s and getting into the 2000s as well. So I think you'll find that the Grow Wealth report will allow us to be able to then look at how the unit trusts have performed, even when you factor in the currency transitions, where we were previously in the Zimbabwe dollar, which was the ZWL, and now we've transitioned to the ZiG currency. You will find that the Grow Wealth report, in terms of the longer term performance assessment, will allow us to be able to filter the performances, even accounting for those currency changes. And I'm sure when you actually look at our report, you will see that we do have reportage on quarters, performance over quarters as far back as January 2023 for the current report. And that's actually quite important in that regard, because as an investor, you are able to actually assess how your fund has performed over that defined period. And I know I mentioned this earlier in my brief introduction, but once you get to understand the landscape of the different asset managers that are in this market from a unit trust fund point of view, you are actually able to interact further with those same asset managers. One of the key values of having this report is for it to act as a launch pad to introduce you to the asset managers that are available in the market, and then you can actually further reach out to them to get more insights and get an understanding of their strategy in terms of how they perform. And that's one of the reasons also why we profile a specific fund manager with each and every monthly report that we do publish. So yes, the technicalities of this report may seem daunting at first. It is a report that carries a lot of numbers. But I think once you get acquainted with the flow of the numbers and what they all mean, you will find that the report becomes quite accessible to yourself as an investor, and you are actually able to now formulate your own investment strategy by picking and choosing which particular unit trusts are performing to your liking and to your risk appetite, and build your investment portfolio in that sense. So it really adds that much needed value to our investors as they get more and more acquainted with the numbers. I think I'll also just highlight uh, something that we also then do with each and every monthly report. You will see that we do have a market commentary section where for that particular month, we just give a high level overview of the performance of the investment markets in particular. So you will see, we will talk about how the Zimbabwe Stock Exchange has performed, and how the Victoria Falls Stock Exchange has performed, and we will highlight some of the listed counters on those markets and tell you how they have performed. And that will also allow you to even look at some of the equity focused unit trusts, your general equities funds, for example, or even the aggressive equities funds, and really get an understanding of where their performance is actually coming from when you actually see from the commentary what would have happened in that regard. So this is really a very important survey for the investing public, and the information flow from it will certainly help our investors to really get the much needed insight on what the ins and outs are. Yeah, so perhaps I'll pause for now again, Farai, and maybe invite questions and comments from our participants.
Thank you, Owen. And let me do a proper job of thanking Tino for her presentation, which provided us the much needed detail to which you are adding, Owen, on the actual construct of the monthly survey, what goes into it, the data gathering analysis that goes into it, and how you go about clustering or organizing these funds so that by the time we see the report, it is organized in a manner which is more accessible. Yes, technical, but certainly more accessible than maybe a member of the public trying to decide, confronted with a myriad fund managers and even more funds of different kinds. I think the survey provides a very good starting point for somebody who wants to get going, or somebody who says, you know, I once knew in the 90s, as you say, Owen, about unit trusts. I want to get back in, but I want to understand how things are structured now. So thank you both for your presentations. We're very grateful for them. And we thank you, participants, for the questions that are beginning to come in. I want to start with one question, Tino, if you are ready to respond. And thank you, Hajine, for your question, where you say, do we have gold-backed unit trusts in Zimbabwe, or this market is still developing? How are they structured, given restrictions on holding gold in our country? Tino, you can give your response to that, and then Owen, you can always come in to add your thoughts on the same. Tino?
Thanks for that question. So currently we have on our unit trust, we have two, the Bud Santana Gold Fund and the Old Mutual Gold Fund. Both of them, I think they are performing
So, Tino, I seem to have lost you. Owen, perhaps I could invite you to come in if you are available, and then Tino can rejoin us when the technology works on her side.
Yes, sure.
Thank
So
you.
as Tino has just mentioned, we do have a couple of gold-focused unit trust funds. There is the Bud Sutton Gold Fund, and then there's the Old Mutual Gold Fund. So these funds, their focus is fundamentally on the gold coins, as you would know them, that are issued by the central bank. And as an investment vehicle, they essentially focus on this precious metal and track the performance of the international gold price. And for those of you who follow markets closely, you would have seen that gold has been going up in terms of the international price more recently. I will just highlight that, gold itself tends to be a safe haven asset. So you find when you have periods of high inflation, investors take a liking to gold because it tends to maintain its value. But also when you have periods of broader, global, geopolitical turmoil, you will know that gold price will actually certainly go up. So whenever you have crises, maybe in the Middle East with tensions between Israel and its and some of its neighbors, whenever things flare up like that, you actually tend to see the gold price go up as a consequence. And so it is a very useful commodity and investment instrument to invest in. So both of these unit trusts do have your gold coins as the underlying asset. And yeah, I must say that in terms of how they have performed, they've performed reasonably well. If you look at just the long-term picture in terms of their performance, I think for the month of July, the Bud Sutton is up just about 1.9% in terms of the return. And mind you, because they track the gold price, which tends to be denominated in US dollars, that then filters into the actual performance number itself. The Old Mutual Fund is performing a bit better, about a percentage point higher at about 2.92% for the month of July. Over the period from April this year to June, both funds have done quite well. I think the Bud Sutton fund is up 49.4% over that particular period, and the Old Mutual Fund is up 45.4%. So you can see that they are performing well, and I think when you actually compare them with some of the other funds, they have actually outperformed your general equity, some of your general equities funds in that regard. So quite a useful unit trust fund to put your money into because it's quite different in terms of its underlying assets from the rest.
Owen, thank you very much. And for those who are sitting on the fence, I think this is the time to make the moves that are necessary. Tino, I know you came back in, and I wondered whether before I take the next question, you wanted to make any additions to Owen's submissions. If not, Tino, do indicate. I'm happy to move on to the next question.
You can move on, Farai, not at the moment.
Thank you, and welcome back, Tino. So we have a question from Pavlov Mukucha. Please unmute and ask your question. Have you unmuted? Have you been enabled? My technical team, I can't quite hear you at the moment.
Okay.
Okay, I'm allowing your mic. Please try and speak now. Can you unmute?
Hello. I can hear you.
Can you hear Pavlov?
Okay, we are trying to unmute him.
Okay, thank you. While we are doing that, I wonder, Tino, if I could just come back to you to say, we take it for granted that our unit trust funds are, as we are all operating in a environment where we have both our ZIG and the USD. Are the investments currently possible in the two, or do we have a situation where our unit trust investments are ZIG only, or they're a combination, Tino?
Thanks, Farai, for that. I think they are a combination of ZIG and US dollars. For your equity funds, they're generally your ZIG for those listed on the ZSE, and the bonds, we now have a number of them, which are USD, and also the property and the gold fund.
That's great. Thank you very much for that response. Owen, you made reference to the issue of data and its availability and how the current survey is performing its actually national service in gathering the data for the unit trust, the collective investment schemes. From inception a couple of years ago. You mentioned the difficulties of accessing data for a collection of reasons, macro predominantly, why we don't really have information which is we can relate to the current situation from previous unit trust activity. And I think for those of us as who are participants who may be students, I'm sure the database that you are building would be a tremendous resource to them all, including, of course, the investors and those who fund managers who want to be able to benchmark and see what their peers are doing. You also mentioned that the South African environment is 5 times at least more vibrant in terms of the product and service offering available. What comment, Owen, would you make on the outlook? Where are we going where our unit trust investments are concerned? Are we going fast enough, or are we paced to the fundamentals of our economy? What do you see when you look ahead, Owen?
Yeah, thanks, Farai, for that question. And in terms of the outlook, there always tends to be a correlation between the vibrancy and depth of a collective investment scheme market. As it relates to the broader performance of the economy within which those unit trust funds are being set up. But having said that, I think in a sort of ironic sense, some of the challenges that we've actually faced as an economy have actually spurred our asset managers to think outside the box a little bit more, to be a bit more innovative, and come up with unit trust vehicles that are more responsive to the investor demands that we now have. We are in a constantly dynamic environment where the performance of the actual underlying assets is constantly changing in many respects. So it then becomes imperative for the asset managers to then come up with unit trust funds that are responsive, that can actually generate the return that is desired. There is obviously competition that is also now emerging and within our landscape as far as other collective investment schemes are concerned that are not unit trusts. So, for instance, we have seen REITs that have come onto the scene. These are real estate investment trusts. they have emerged on the scene and have come through, and they are providing some competition to your traditional property-based unit trusts. So it then again it requires the asset managers to then respond and craft those property unit trusts in such a way that they remain attractive, they remain competitive. We've also seen exchange traded funds, some of which to a large extent are very similar to your existing equities-based unit trust funds. So that evolution of the landscape will require our asset managers to constantly be on the lookout and work on introducing new types of products. We probably have been a bit curtailed to an extent because of the relatively low disposable incomes that your ordinary citizens out there do have. So because they don't have that much disposable income, there isn't much headroom in terms of them being able to invest. But the good thing is that unit trust, perhaps, if you are just starting out as an investor in our capital markets, are probably your best bet to pursue in terms of an investment vehicle. And then as you get the hang of it, you can actually further diversify and start maybe your own direct equity investments on the capital markets and so on. So yes, the market is evolving, but I think the outlook is really a bright one, largely because I think we are a very enterprising society that is always on the lookout for new types of investments. And I think as we see our capital markets actually deepening, it creates a wider pool for more unit trust investment vehicles to actually come on board and become significant. I always like to make reference to other developed markets. If you look at how things have developed in the largest unit trust market in the world, which is the United States, you will appreciate that these are very useful investment vehicles that can really serve the investment public well. So we are looking forward to that, and we will look to continue to innovate. We will look to continue to bring other underlying assets on board, and that will definitely see us broaden the unit trust investment landscape in this particular market.
Owen, thank you so much for giving us that glimpse into your thought process, your which is informed by the work that your organization has been doing with the survey, and maybe even giving a little bit of direction to fund managers who may or may not be thinking in the direction that you are taking them. You speak, Owen, about low disposable income, and all I'll say at this stage is when you drive along the highways of our country, I'm always struck by the number of new properties that have gone up since the last time I'd have used those highways. This is just talking about disposable income versus investment in permanent property.
Yeah.
Let me just try, before you answer me, Owen, let me just try Pavlov again. Please unmute and ask your question.
Thank you very much. My question really centers around data. I think you've been talking about data earlier on. You mentioned that you've got a bond index that you benchmark with. I'm just interested in finding out in a market where we are, what are the constituents of that index that you use for benchmarking for bond market? I could, even if you could also give me the database that I could also access, it could be very important in our market right now. The index that you use for bond market in our market right now. Thank you.
Thank you so much, and I'm glad you were able to come through with your question, which I'm going to direct to Tino in the first instance, But of course, both Tino and Owen are part of the team that looks at the survey. So, Tino, would you like to look at that to say what are the constituent parts of the bond index, what goes into it, and is there the possibility of having access to use it? And I mean, these are amongst the initiatives which, at regulator level, we are interested in to see how the market is collaborating. How I think Owen, you spoke about information flow and information efficiency. Perhaps these are amongst the issues that you were referring to. So, Tino, if you could unmute and come through with a response to Pavlov.
Thank you very much for that question. So currently, what we have been inputting in that index as the different bonds that we have been seeing in the market, and we then look at the rates that are being charged and sort of come up with an average using different weights to come up with an average that we then use as an index for the bonds. So in terms of accessing that database, I think it's something that we can assist with. After this meeting, we can touch base and see how best we can help each other out.
Thank you very much, Tino. Based on that, Pavlov, do you have a follow-up to that response you've been given? And I will come to you, Owen, both on this and also the comparison or the discussion on disposable income. Pavlov?
Thank you. I think if I can also get, if I'm able to get the reference, then that would be fine for now.
Thank you. So perhaps, Tino, you can provide some information in the chat, which Pavlov can then use to get in touch with you, or alternatively for him to, for you to get in touch with him. Owen, would you like to come in as we begin to wind down our time together on this webinar?
Yes, sure. Thanks, Farai, and thanks for the question, Pavlov. And yes, the benchmarks that we do use in our growth survey are vitally important. And when we started to do this report a few years back, benchmarking was always going to be the challenge. It's relatively easy, as you can imagine, to perhaps benchmark your general equities type unit trusts and even your aggressive equities, because you do have a standard benchmark in the ZSE All Share Index and some of the other sub indices that are on our local stock exchanges. But for other sort of unit trusts based on other asset classes that do not really have an active secondary market, it was always going to be a challenge. But we do endeavor to collect as much data as possible. And as Tino indicated, we really look at the landscape of all your fixed income instruments that are available within our market. And this can include fixed income instruments that are on offer from our local banks, as an example, others that are being issued by our private companies that issue short-term, medium-term to long-term type of interest-bearing instruments. And also, from time to time, the instruments issued by the central bank on behalf of the government. So your treasury bills, as an example. I think the challenge with fixed income instruments is always going to be along the lines of the currency side. So where you have a local currency denominated type fixed income instruments, you do not have a lot of depth in terms of that particular market. So we have to really innovate a little bit in terms of doing inferences from perhaps fixed income instruments that are issued in US dollars. And then we make our inferences that way to come up with a benchmark for a local currency issued instrument. So those are some of the technical challenges that we have. But we are obviously deepening the technical expertise of it, and I'm sure it will stand us in good stead as we go towards the medium to long term.
Thank you so much, Owen, for your response and your intervention. I'm very grateful for that. And while you were talking, I was just casting my eye over the participants in this webinar and could see that we have a good combination of more recent players in the sector and also some old hands from the sector. So I'm sure the capital market, I think, is likely to be trending in the right direction where we have the benefit of experience across a number of events, and also those who are not encumbered by the past, so to speak, and can therefore maybe look at the new asset classes and bring, hopefully, more interesting and responsive vehicles, to borrow your terminology, Owen, to the market. We have spent in some of our responses, there's been some reference to, the strategy, the level of risk, issues of aggression. I wanted to know whether I could ask you to talk a little bit more about exactly what are aggressive equity funds and how do they differ? I know you made somewhat of a distinction in your presentation, but I think it would be great to understand a little bit more about that, particularly with our environment in mind, knowing that our environment offers a lot of activity which is outside the regulated space. What would your comment be, Tino, on the level of aggression and sort of risk appetite of our investors in ZIM?
Thank you very much, Farai, for your question. I had some bit of a network challenge, but I'm assuming you were referring to the aggressive equities funds and the general equities funds. I'm not sure if I'm right because I had a network glitch somewhere in between.
Yes, you are absolutely spot on, Tino.
Okay, that's fine. So, aggressive equities funds and both the general equities funds are both types of investments that focus on stocks, but however, they differ in their investment approach, risk level, and potential returns. If you look at your general equities funds, generally you are investing in a diversified portfolio of stocks across various industries and sectors, and they sort of aim to provide long-term capital and also income growth. They seek to balance between risk and potential returns. But if you look at aggressive equities funds, they invest in a more concentrated portfolio of high growth stocks, and they aim to provide high capital growth, potentially at the expense of income. And they also have a higher risk profile as compared to your general equities fund. And also, they do seek to maximize returns, potentially sacrificing some capital stability. So in terms of differences, I think risk level, aggressive equities funds have a higher risk profile than your general equities, and also they differ in terms of investment style and in terms of concentration. Your aggressive funds, they often have a more concentrated portfolio, whilst your general funds are more of diversified. And I think in all this, investors should consider their risk tolerance, how much risk they are willing to assume, and also investment goals, their time horizon, before choosing between an aggressive equities fund and a general equities fund.
So, Tino, having said that, and thank you very much for that, where is the money going? Is it, are people adopting a very conservative approach, or are you finding that fund managers are going gung-ho and trying to maximize returns? And of course, the key word for every Zimbabwean remains inflation. Are these investments keeping pace with it?
Thank you very much for that question. So if you look at our unit trust survey, we see that most asset managers are in the general equities funds, with a few of them in the aggressive equities fund. In terms of performance, I think for July, the general equities fund was performing quite well, and I think they had an average of about 44% in terms of returns. And if you look at your aggressive equities fund, I think the average was around 45%. thereabout, and they were both above inflation, because inflation, since the ZIG has been introduced, we have been seeing some form of stability, and I think both funds were performing above the inflation for the month of July, and also for the quarter ended June 2024. I think they performed quite well in ZIG terms, and I think we are seeing some returns on that front, although most asset managers are in the general equities funds.
Fantastic. Tino, I want to thank you so much for coming in on that question. Owen, I also want to thank you for having come in and addressed the issues of, stepping in when Tino was not able to on the issue of gold-backed unit trusts. Do you have a comment for us before we end our webinar, Owen, on property development versus unit trust investment?
Yeah, thanks, Farai. Yeah, certainly. I think, as you highlighted earlier, we are seeing a hive of activity within the property sector, where real estate assets of all types are really coming to the fore, and it's good to see. In some sense, our view is that it's a market that is sort of playing catch up. I think because of some of the macro challenges that we experienced from sort of the mid 2000s onward, it kind of depressed the real estate development market, so to speak. The secondary market was always active, but I think the development market was a bit static. But we have seen, I think, in the last couple of years or three, the pace really start to pick up in that regard. And what it does, again, it will avail more property assets to be incorporated, if you will, by the asset managers into their unit trust investment vehicles. So in as much as we do have real estate investment trusts that are coming into the market and they have a certain flavor, there is still room for your traditional property unit trust funds to play a key role in this particular market. And I think as the property development market then becomes a bit more mature in the coming short to medium term, we will start to see the performance of those underlying assets filter into some of our property unit trust assets. If you look at our survey, we really would want to see more property unit trusts come to the fore, and we are likely to see that from various sponsors that are working on their underlying fund structures as we speak. So that certainly looks to be a good development in prospect. But we are obviously seeing that injection of capital into the property market, and there is still scope for further developments, maybe a bit more outside Harare as the main urban center. There is quite significant scope for more developments to happen in other urban centers across the country, and that can only benefit the investing public when all those assets get incorporated into a unit trust type fund vehicle.
I think this is a great time together. There's so many issues have been explored. There's so many more issues obviously to be discussed, and I'm happy to indicate that I think in the series for Grow Wealth, we should have one more webinar opportunity to look at the survey, its implications, what the investment landscape is looking like, and what the level of participation is for the Zimbabweans who are participating. I like the fact that Owen, in your remarks, you spoke about investor education. That is precisely why we have lined up various webinars, and this series in particular, to ensure that we are getting information out there hopefully raising awareness, but more so raising participation, which is crucial. I want to thank you as participants for having been with us today. I also want to thank our guests, Tino and Owen, who spent and dedicated time to prepare for the presentations and also to field our questions in this area. I'm also hoping that the follow-up activity will be actioned so that, for example, on the bond index, Pavlov, for example, can access the information that he needs to inform the processes that he is involved in. It just remains for me to thank you all for being with us. We look forward to seeing you at the next one. And in the meantime, enjoy the rest of your day. And in the next day or two, enjoy your weekend. Thank you very much from SECZim. Take care.
Thank you, Farai, and thank you to the guests as well. Enjoy. Cheers.
Thank you. Enjoy the rest of your day.
Thank you so much to you both.